Hey guys, Bill Soriano here from Pittsburgh. It is Saturday morning, September 2nd. We're into September already, guys. Okay, so this year's almost gone. If you haven't started your Forex trading yet, please get it started here. I got everything you need here. And this is the first video that I'm putting now in my new group, the Forex Smart Money Supremacy Group. And so if you're watching this video, that means that you've joined me in that affiliate offer that I was talking about for the last month or so. $25 a month. It's an affiliate offer with Home Business Academy, HBA. And the reason why I started doing this was, I was providing this training videos for free in my Forex Smart Money Trading Academy group for years, a couple years at least. And I just started journaling all of the results for the last 2 months. So basically July and August. And since the results were so great, I decided that I was going to have to charge something in order to get people into this group. But I didn't want people to have to pay me directly for this training. So I figured what I noticed was that, as you've probably heard this before, most people that take the Forex training learn the strategy, but then they have no money to fund their own trading account. So they can't make any money with it, or they don't have any money to take a funded challenge to get a funded account to trade on. So this affiliate offer that I got you guys into, some of you that are already are in that, some of you may have joined me in IM Academy already, so you have access to this group as well. But there's only a select people right now at the time I'm making this video that I sent the invites out to, and I just actually sent those invites out a little while ago. So you probably just responded to accept that invite if you're watching this video right now. So what we're going to do today is we're going to do our trade recap, right? And what I want to show you is that this was July. This was for the month of July. So in the month of July, that's when I started really journaling all the trades, and I don't have images of all of them. I started doing the images later in the month of July. So we have trade chart images of all the trades here. And in the month of July, we had 33 trades that went off. Right now, let's be very clear here, guys. I don't take all these trades. Okay. Actually, I take very few of them because I own a restaurant right now, and so I'm there during the day, and so I don't have the opportunity to take as many trades as I would want to. But I keep track of all of the trades that go off using this strategy. Okay, so that's the main thing to remember here. And so had you taken all 33 of these trades, you would have had 21 wins, 12 losses. That's a 64% win rate, guys, and you would have had a 30% gain on your trading account. And that's because all of our trades are 1 to 2 risk to reward ratio trades. We risk 1% to get out with a 2% gain. Okay, that's it. We don't close half the position at a certain point. We don't do any crazy stuff. It's just a 1 to 2 trade, right? If our risk is 30 pips, then our take profit's 60 pips away, right? But it's always 1% of our trading account. So with that in mind, we can lose 2 out of 3 trades. As you'll see, last week we did that and still break even for that week or whatever time period that is. And we only have to win 40% of our trades, or 4 out of 10, 2 out of 5 to actually make money. So in July, we won 64% of our trades. We would add a 30% gain on our trading account had you taken all 33 trades. Now, you may not have been able, you probably wouldn't have been able to do that. And, I have no way to know. Maybe, you could have maybe just taken 3 of these trades that week, that month, and they could have all been losing trades. Right? We have no way to determine what your actual results would be, right? Except by saying, because we don't know when you're actually at the charts and how much time you have to follow along with my training and how much time you have to mark the charts up every day, right? And look for trades. The only thing we can say for certainty is if you would have taken all 33 of these trades, you would have gained 30% on your trading account for the month, right? Now, you may have taken just all 21 winners, or you may have taken just all 12 losers. I have no way to determine that. All I know is this is the total for the month, okay? Now, if we look at last month just finished up here, August, we only had 22 trades, so a little bit less, but that's still plenty of trades to make money with. We had 13 wins, 9 losses, a 59% win rate, right? And again, we only have to win 40% to make money. We were at 59%. And had you taken all 22 trades, you would have had a 17% gain on your trading account for the month. And again, like I said, last week was actually our first losing week in the last 2 months since I started really journaling every trade. I journaled some of the trades before, but not all of them. I have chart markups on many trades going back years. But I just started actually journaling them the last couple months here because I knew I was going to start requiring that people pay this $25 monthly affiliate fee to this other product in order to get access to all of this. So, of course, these journals and stuff will still be dropped in the free group, but the training will not be. Like if you have access to this video will be put on YouTube, but it won't be a listed video, it won't be a public video, so you can only access it from this group with the link, or if I send you an email to the link. So that's the only way you can access it. Now, from time to time, I will share some of the videos across social media and try to get, you know, some likes, comments, and, you know, all that stuff on there so that I can build up my YouTube channel. But for the most part, you won't get access to these videos unless, you know, you've joined me in that offer, and, you know, that's why you're watching the video. So you can see here, that was the first actual losing week where we lost 2 out of 3 trades, right? You can see the first week of the month here, we had, looks like 3 wins, 3 losses. The second week, all 3 wins. Then there was a 1-1 week there. And then the week before we had 5 wins, 3 losses. That was the most trades for the month in a week. And then this week, of course, was a losing week. But we got all the chart markups here for you to view. And I will be dropping this into the group here so that you can have access to these, right? I did drop this into the free group as well for this month, but that will be the last time that happens. So rest assured of that. So anyway, today what we're going to do is we're going to go over these 3 trades here that went off of the week, and we're going to show you what I was looking at on the 15-minute chart, why we got in the trade, where we got in the trade, and of course what happened, right? Why, when, and what, I call it. So let's see if we can get started here. So this was the let's see, the 3 trades that went off this week were AUDCHF, GBPNZD. Let's go over the winning trade first, GBPNZD. Okay, so this is what the chart looked like here. This was back on Tuesday, about 9 a.m., right? Tuesday morning. And you can see here, here's our 4-hour area. So let's first look at the daily chart at this point of time. When we looked at the daily chart, we could see that it was very bullish, right? The higher time frame trend was bullish, so we would only look for long positions here. When we dropped down to the 4-hour, we identified this 4-hour order block right here, okay? And so we put our point of interest right at the open of that 4-hour candle that we used to identify the order block. Of course, we used our Smart Money Concepts Lux Algo indicator to help us with the order block. It works for me about 80% of the time, as you know, in my videos. So price comes down, and we can see here that it did hit, you know, this 4-hour candle is showing it hit because that's the point in time that we're on right now. So on the 15-minute here, though, it has not hit that point of interest yet. So let's see what happens here. And boom, price comes down. It hits our point of interest, right? The alert goes off. We come to the chart, And so the first thing we want to do is we want to identify where we need to get our choke or change of character, so that we know that it's safe to set our buy limit order now at the new 15-minute order block or the lower time frame flip zone, whatever you want to call it. So at this point in time right here, we see the price is moving down, right? We have a low here, right? We have a lower low here. And then we get a break of structure to the downside here with our alert going off. So price is kind of moving down on us. So we don't just want to jump in the trade and take it to the upside, right? We want to wait for that choke or that lower time frame flip. So at this point in time right here, we would need to get a break of structure up here, right? In order for that choke to happen, right? So let's see if price does go lower. So price actually comes up a little bit, and then we get a break of structure to the downside now, right? So now when that happens, we're able to move our choke down to here, okay? Because we got the break of structure to the downside, right? And then here, we got another break of structure. So now what we need now is we need that break of structure to the upside here on that red line to be broken in order to get our choke, which gives us our change of character, okay? So let's see what happens now. Price kind of flirts around with invalidating that zone, but it never does on the 4-hour chart. So if we go back to the 4-hour, you can see that we never get a close below our zone on the 4-hour chart. So our area is still valid, right? So right here, we get a price, we get a candle to close above that red line. So that gives us our choke or change of character. Now we can turn our indicator on if we want some help here. And it's giving us this lower time frame flip zone right here, which is a valid zone for me. So that's where I'm going to put my buy limit order right there. And my stop loss is going to go obviously at the wick, but then I'm going to pad that, right, with the 14-day ATR, which is down in the right-hand corner of my screen here. And it's telling me it's about 12 pips. It's the 14-period ATR. So it takes the average of the last 14 candles on this 15-minute chart and divides it, the whole candle range, and divides it by 14. So we ended up with about a 35 pip stop loss on this trade. And so since we want to get a 1 to 2, we have to get about 70 pips to the upside, right? Right. So we're waiting for price. We set our limit order right here, basically at 2.11881, right? And then we hope the price moves up and we get our 2% gain before it moves down and we get stopped out at a 1% loss, right? This is our logical area to trade from, okay? This is where we're using our edge. This gives us an edge in our trading, right? Otherwise, we'd just be gambling, right? So let's see what happens here. This was obviously right there. Price comes down it was I think 1:30 a.m. here on Wednesday morning. So right before the start of the London session, comes down, gets us in our trade. Okay, and then what happens is by 3 a.m. right there, we've already gotten out with our profit. Okay, so that was our winning trade. This one set up beautifully because a couple of factors. One, our choke occurred inside of our 4-hour zone, which is very powerful. Most of our winning trades, you'll see that happen. Sometimes the choke and the entries occur outside of this zone. Now our choke area was inside of the zone, and obviously our lower time frame flip zone was also inside that zone. That's always the best trades to take. Now, sometimes it does happen outside of the zone, and if it's close enough, we still take the trade. But these are the absolute best trades where that choke occurs inside of that zone. So this was our winning trade here in GBPNZD. And again, we got a 2%. You would get a 2% gain on this. You would risk 1% of your trading account to get a 2% gain. Now, if you're one of those people that risk 2% per trade, then you would have risked 2% to get a 4% gain, right? Okay. I like to do 1% because I don't like to have any more than 2% of my trading account at risk at any one time. So if I just risk 1%, then I can now, if another trade opportunity presents itself, while this one's still at risk, I can take it, because if they both would lose, I would only lose 2% of my trading account. Okay, so that's why I do that. Now, the next trade I want to go over is AUDCHF, and you can see here that this is our 4-hour zone here. It's a pretty big zone. Just shut this indicator off here for a second. Our point of interest was right here, which you could see that got hit on Monday night about 11 p.m. Again, if we go to the daily chart here, you could see that AUDCHF is in a downtrend, right? So obviously we only want to sell this. And if we look at the 4-hour chart, we had this 4-hour order block right here. We did select another order block up above, but this 4-hour order block looked like it was going to hold for us, right? So you could see here that we did have another one selected, but this was a valid 4-hour order block right here to trade from. So price hits our point of interest, right? So we then need to determine where price has to get to for us to get our choke, right? Or a change of character. So at this point right here, we would need price to break structure right here, a candle to close below there in order to identify our sell limit area, right? So let's see what happens here. So now here price goes higher. So once price goes higher, we're able to move our choke to this area right here, which is, I think, what we ended up doing. Well, okay, price went even higher again. So that's where, okay, so initially our choke was right there. So now that's where our choke ended up being because price went higher. Okay, so what I'm trying to show you is this: price is moving up, right? So we want to take this trade to the downside, right? So we have price obviously climbing up. So we don't want to just jump in. We need a confirmation, right? So here, price does give us, a choke here. Well, no, our line was down here. So price came down, did make a little bit lower low, but then it moved higher. Okay, so what happened was, in order to identify our choke here, we got this break of structure to the upside, and then we need a break of structure to the downside right here, which we got. So now if we turn our indicator on, it's kind of giving us this area up here, which is a very good area. It looks like a very good area to trade from, okay? Okay, so we did get our change of character because this is a decisional area, because remember, we have this other order block marked up here as well. So we would hope that if this was going to lose, if this area wasn't going to hold, that price would just blow right through it, and we would get a close here on the 4-hour chart above this, but we didn't get that. Okay, so that sucked us into this trade here, right? So we're going to set up our sell limit right here. Right, our stop loss is going to kind of go there, and then we're going to add our ATR on here. Let me just wait. So our ATR is not showing up right now, but I think it was, let me just see if I can put it back on. Average true range, right, is, you can see here, 6 pips. It's about 6 pips. Right, so let's just click out of here. See if we can get rid of one of these here. Okay. So that's our average true range right there. It was about 6 pips. So we made this, I think, about a 12 pip risk. And so all we needed to get was a 24 pip move to the downside once our sell limit was hit. So let's see what happens here. Okay. You can see how price is just kind of consolidating in this area here, and then boom, right there. That's where we would get into this trade right here. And that was at 8:30 a.m. on Wednesday. Okay, and then it looks like price is going to kind of move in our favor. Right? Right, price is kind of moving down there for us. And then what happens is it kind of reverses, takes us in the drawdown, then it comes back down. Right, and then it kind of consolidates, and then boom, right there, it takes us out of this trade at a 1% loss. So that was a losing trade there. Nothing you can do about it. Okay, and what's going to happen is price is now going to move up into, let's just see what happens here throughout the rest of the week, where price moves up into that other zone, see? And if we look on the 4-hour chart here, we see that this line right here would be another alert, where we would have set another alert. And then what happens there is you see how price moves up, hits that, right? You get the break of structure to the downside, and it looks like you could have gotten another losing trade. Of course, we wouldn't have gotten in that trade because we only want to take one trade from one particular area. So if we win, that's great. If it comes back, we're not going to jump in again. If we lose, we definitely don't want to jump in again, right? So this was one of our 2 losing trades for the week, right? And then the other one, the other trade that we had this week was GBPAUD. And I want to look at this again because I may have looked at this trade wrong here. So that's why I like to do these recaps for you, because sometimes I see that I actually made a mistake. So let me see, as I do this right now, I may do it a little bit differently than I actually did it this week. Anyway, you see right now we're on Monday about 11 o'clock at night. Again, if we look at the daily chart here, we see that price is bullish, right? We do have this move down, but it's not even enough really to give you a change of character to me, right? Some people would think that this break of structure here is a change of character. I don't think so. I would need price to come down here pretty far, right? Just shut this off here. It's already off. Okay. So on the 4-hour chart, we identified this order block right here. This was a very nice looking order block. You had a nice red candle here. That's our banker candle. We have this big engulfing candle after it. All this imbalance, okay? All this imbalance. Now, we also identified another order block a little bit lower on here. But this was a logical area for price to come back to and react, okay? So when we drop down to the 15-minute, right, we were waiting for price to hit this blue line here. That was our point of interest line. And so let's just play this forward here and see what happens. So right here, we get our alert gets hit right here. And so at this point, we would need a break of structure to the upside about right here in order for us to get our choke or a change of character, right? And then we'd be able to identify our lower time frame flip zone and where to put our buy limit order, okay? So let's see what happens here. Now, boom, right here, price break structure to the upside. So at this point right here, If we turn on our indicator, it's going to give us this little zone down here. It gives us a zone up here, but we're not looking to sell this, right? We're looking to buy. It gives us this little zone down here, which is a valid zone. Now, I don't know if this is the zone that I took in the trade because I've taken everything off here. Would have to go back to the chart markup to look. But let's just mark this up to see if maybe I was wrong in something that I did this week. So this is a very small, very small trade area here. It's about 10 pips down to the wick there, but our ATR down here in the left-hand corner is about 16 pips. So we're going to make this about a 25 pip stop loss, and we're going to try to get 50 pips to the upside, right? Right, so let's just see what happens here. Okay, price comes down, and boom, what happens is here, we would have already got stopped out of this trade, okay? So this was one way that you could have looked at this trade, okay? So I'm going to give you a couple, and again, this is where the trading becomes subjective, right? When we look at the daily trend, it's pretty much, only maybe about 5% subjective, right? It's about 95% locked in where you can identify the daily trend. When you're marking up the 4-hour order block, you're still about 90%, only about 10%, 5 to 10% subjective, where other people may mark up different areas. But when you drop down to a 15-minute time frame, you start looking at this structure and this order flow, it's a little bit more subjective. It's more about 50% now subjective. So what I'm saying, to give you an idea, what I'm saying is some people may have thought that, you would have to get a break of structure up here, all the way up here, in order to get your change of character. So at this point here, right, we haven't got that yet. We haven't got that yet. Okay, and price has now gone lower. And by going lower, it just it gives us that same break of structure right here. Okay, so let's just see what happens now. Now you get a break of structure to the downside again. So in this case, now you could move this all the way down to here. So this one, I'm just showing it to you a couple different ways here. So right here, you could have gotten a break of structure, right? So that would have been your change of character, right? Had you moved this down, okay? But some people may have still left this all the way up here. Price now goes even lower. So now when it goes lower, you could definitely move this right to here, right? Okay, so now we get our choke or our change of character. If we turn on our order block tool, it's giving us this order block right here to trade from. And I think this is the one that I actually marked up, right? So boom, where your stop loss is going to go here. You're going to add another 16 pips onto that. So your risk is going to be about 40 pips away, and you're going to try to get 80 pips to the upside, right? Let's see what happens from this area. Okay, price moves higher. Now it's starting to come down. Starting to come down here for us. So this is why it's a little bit more subjective when you're on the 15-minute chart. Boom, right here we get in the trade. Okay, so right here we're in the trade. Now we have our stop loss right here. Now again, some people may put their stop loss all the way down here at this wick over here. Okay, for me, I would use this one. And like I said, I added that ATR, that 14-period ATR on. So that put it right about there for me. Okay, you can see what happens is price kind of comes back down into drawdown here a little bit. It consolidates, right? And then consolidates some more, tries to climb up, climbs up a little bit more. And then it drops down and we get stopped out. So what do we see here? Right here, we almost got out of this trade with a win. Okay, so a couple of things we could take away from that are, some people would say, well, if you didn't add that, if you didn't pad your stop loss, if you just would have put your stop loss right there, but then what happens is we get stopped out. See? So what some people would say is, well, if you just put your stop loss right there, then you would only had to move up, 46 pips to get your win. But you would have got stopped out first before that happened. And that's why we pad that stop loss. So it's just a losing trade, guys. Like I said, it's a losing trade. Okay. And for the month, for the week, we lost 2 out of 3 trades. But for the month of August, right, we won 59% of our trades. 13 out of 22 trades were winning trades, just 9 losses. And had we taken all 22 trades, we would have gotten a 17% gain on our trading account. So that's what happened this week, guys. Those are the 3 trades. And so stay tuned for my video tomorrow, which I'm going to put in the group here, right? And in my video tomorrow, I'm going to go through all 28 Forex pairs. I'm going to identify the daily trend. I'm going to identify the 4-hour order block to trade from, going with that trend. We're going to put a point of interest alert inside of that 4-hour order block, normally at the open of the banker candle that we use to identify that order block. I'll show you how to use that free indicator to help you identify these order blocks. Is right about 80% of the time. The order blocks must lead to a break of structure. They must have an engulfing candle after that banker candle. They must cause imbalance. They must not have been mitigated already or touched already, right? After a break of structure occurs. And once those 4-hour points of interest are hurt, we drop down a 15-minute chart and we wait for that lower time frame flip. And that's just what I showed you today on this video. How when those 3 trade alerts went off this week on those 3 pairs, what happened next? I showed you the 1 winning trade, the 2 losing trades. But like I said, guys, overall for the month, we won 13 out of 22 trades, or almost 60% of our trades. We won 17% gain on our account had you taken all 22 trades. Now, I don't know. I don't know how much time and effort you're going to put into your trading. I don't know how much time you're going to spend on the charts every day. So I don't know how many of these trades you would have even seen or even taken. You could have just taken 3 trades. They could have all been losses, or they could have all been wins, right? I don't know. You could have taken all 13 winning trades and been happy, or you may have taken, 9 trades and they were all the losing trades. I got no way to determine that for you. All I know is that if you take all 22 trades, you would have had a 17% gain on your trading account here in the month of August. So tomorrow, like I said, look for me to drop my video in tomorrow where I go through all 28 pairs. And again, you're watching this video, right? That means that, let's get rid of these messages here. That means that you're in my Forex Smart Money Supremacy group. You've joined me in one of my affiliate offers, or you're with me in IM Academy maybe, and that's great. I mean, that's the only way that you'll get access to this continued training. Okay, so that's it for today, guys. Bill Soriano from Pittsburgh. Have a great weekend and look for my video tomorrow.